Okay, folks, good morning and welcome to Swing Trading today. This is Bob Desmond and it is 5:17. I'm a bit late here. 5:17 in the a.m. Eastern Standard Time on the 28th of October. I wanted to go live this morning to talk about the weakness in the market, and rather than, and this is what I see so much with people that I work with, is rather than taking a look at the futures market, I'll bring up the S&Ps right now, and betting that, you know what, we can't go any lower here. Maybe they're right, but that's usually not the case. So what we're going to talk about this morning are levels on the S&P 500 where there may be some buyers of like mind willing to step in to put a bid under this market. I'm going to talk a little bit about politics here and its influence on the markets at current, and people may not like it, but I'm not going to apologize for it. This is not taking one side over the other. This is dealing with hardcore fact, and we are playing hardball politics with everything in this economy, whether it be our society, whether it be the financial markets, our healthcare, you name it, it's there. There's a war going on. And prior to the election, I think that war is going to find its home and place in the stock market, because the strength of the markets and the strength of the poll numbers of the president are tied together. So if we see a major sell-off in this market, that could chisel away at the polling with, 5 days left to go until the election next Tuesday. Now, this morning we wake up, we find that the S&P 500 is down over a percentage point. Not horrible, not good, but not horrible. We kind of anticipated this last night with the earnings out of Microsoft. Let's see what that's doing this morning. Which is not changed all that much since when I spoke about it last night. I did a video. I'll link to it at the end of this one regarding Microsoft and the Microsoft bubble. And this could be the beginning of where we begin to see that slide in Microsoft shares. Now, David Einhorn came out yesterday. I'll go live on Thursday night. I'll talk about this a bit. And finally got the cojones big enough to come out and say that this was a market bubble put in on, I believe he said, the 20th of September. Oddly enough, that's exactly when I said that the Qs had topped out. We went short of the Qs along with the NASDAQ because we tapped into that third standard deviation Bollinger Band, which we have rarely done in prior times. And we've never hit higher highs ever since. So we'll talk about that. He's a bit late to the party, but I don't think he's necessarily wrong. All right, so Microsoft, no major sell-off with the market, down slightly. You know, I was kind of bearish on Microsoft technically yesterday on that commentary. That doesn't necessarily mean that I expect a crash in Microsoft shares right here, right now. Maybe they can carry it a couple of rounds. For all I know, you know what? We need to keep an open mind. Maybe they're going to take it to new all-time highs. What do I know? All I am is a guy looking at a chart in his office at home. Let's take a look at the NASDAQ 100. We were weaker, but we did break down below this support level here. Remember, on the 26th, we reversed on this reversal bar, obviously, rallied, broke out above this diagonal resistance level but we got stopped dead at this primary resistance level, and now we're putting in yet another lower high. Now, it's going to get real fast in this market if we break the lows of the 26th on the NASDAQ 100. This is a line in the sand for us. I don't like to chase markets as they are dropping. We did open up a short position. If I already mentioned this, I apologize. We did open up a short position on the Qs after hours yesterday. I will be looking to lean into that short position. We're testing the market at current. If the market rewards us by giving us a profit, well, then, you know, what we're going to do is we're going to add more to that trade as the market tells us that we are correct in our directional call. Now, the caveat here is, will Treasury, will the Federal Reserve, will the President pull a rabbit out of their hat and provide liquidity to this market? Will they issue checks in some form or fashion to the consumer, helping drive this market up higher? Because that's exactly what this market needs. The Federal Reserve knows it, and they've been vocal about it. But the Democrats know. They know that the minute they sign off on that legislation, this market's going to rip through the ceiling, and in all probability, you're going to see a second term for the president. This is their Alamo. This is their final line in the sand. Can they knock the markets down? The Dow Jones. Now, the Dow is really taking it on the chin, and I've been talking about this with members quite a bit, that the Dow daily chart, in fact, let's bring it up. Two charts, actually, that have been a major concern about the Dow, and that is that the stochastics are declining down below the 50 mark. I'm going to make up T-shirts. I'm going to make up caps. If anybody has an idea of how to illustrate this, because I'm very long-winded and I have very little imagination when it comes to art, on how to create a T-shirt or a diagram to illustrate that when you have Stokes down below 50 and they are declining, rallies tend to fade. Put it in the comments section, please. So this is a major concern. We've broken support. I think that ultimately we're coming down here. Now, we do have a bit of support here at 27,386, but my guess is that if we're not already through it in the pre-market, we will be through it. And we're going to come down here to 26,854. Where are we opening up today? We're not that far away. We're at 26,942. No. 26,937. I knew I was seeing something there. Okay. So, weak and getting weaker on the Dow Jones. The other chart that's quite concerning is the chart of the Dow Transports. And the Dow Transports are down, or were down yesterday, about 1.5 points. And much as what you're seeing on the Dow Jones in terms of Stokes is unfolding on the Dow transports. You saw Boeing break support. That 160 mark on Boeing is very, very important. So I wouldn't go buying more right here, right now. I bought a little bit of Boeing. I'll buy more when a support level is hit, and we'll talk about that on Market Wrap and the week ahead commentary with members, because we've been raising cash. We put on a short hedge. Now we're positioned not to be emotional, have to react to what the market is doing. We were proactive. We saw it was coming down the pike. We lightened up a bit. We sold most of our, I should say, not all of our, gold mining position, the GDXJ. I'm going to talk about that for a moment. Sorry about that noise. We're holding gains here, despite the fact that gold is moving lower. Now, I'm going to be watching. Gold continues to weaken up here. We're still holding 1900, which is critical. But it looks like we are rolling over here, which puts into question the ability of the miners to capitalize on yesterday's rally. Now, why have I not repurchased my GDXJ position, the shares that we sold? Very simple. I've said this already. I'll repeat it again because it's worth it. These Stokes are very weak and getting weaker. History has shown us that you do not want to go buying stocks when this is unfolding. This is a process. And yesterday, believe me, I was tempted. This is a beautiful candlestick. A bullish key reversal bar. One of my top 5 most powerful candlesticks. There's a video tutorial below. Click to it. It's free. Volume. Well above average yesterday. Yesterday was a good day. I was very tempted to go rebuilding our position, but what kept me away was the fact that gold really hadn't broken out. The dollar was gaining steam, which the gold trades inversely of, and the miners are reactive to as well. And these Stokes are still very, very weak. So in the face of a declining price of gold today, can the GDXJ hold support at a bare minimum? If it does, and we're beginning to see resolution to these Stokes and they begin to flatten out and to begin to hook back up, then we're going to lean into the long side on the GDXJ, assuming that we see TIPS, Treasury Inflation Protected Securities, begin to firm up, indicating that, let's bring up a chart of the TIPS, indicating that there are signs of inflation. This is a daily chart. And you can see that we rallied off the lows of last week. We have a new weekly high. This is gold bullish. This is silver bullish. This is gold miner bullish, especially if we break out to new all-time highs. So all this chitter-chatter out there about deflation, TIPS are not telling us that story. That's a line that the government is selling us. When you take a look at the monthly chart of the TIPS, we are very close to new all-time highs on the TIPS. So I'm chomping at the bit to rebuild on our gold mining trade, to add to our silver trade. Not quite yet, though. The market will tell us when it's right. Now I'm going to keep this brief today, folks. Please leave a comment below. Thanks for joining in. If you have any questions, or if you have any symbols that you want me to go over tomorrow night being Thursday, do a hashtag, use your symbol, put it down in the comments section of the replay, and I'll try to go over them tomorrow night on Thursday Night Stock Charts Live. If you want to get alerted as to when we go live, use that link below to get alerted 15 minutes prior to me going live. Or if you're already on an email list, you're already going to get alerted. No matter what you've ever opted into, you're going to get an alert, so don't opt in twice. Everybody have a profitable trading day. Members, I will talk to you later. Be well.